Hello and welcome to the Global LPG Conversations series. This is Argus's podcast where we cover the latest developments in LPG markets and prices. My name is Peter Wilton. I'm editor of the Argus International LPG report, and I'm joined today by our Shanghai-based lead LPG analyst, Celia Chen. Hello, Celia.
Hello, Peter.
Hey, so
Hello, everyone.
today we continue our three-part series where we're analysing the initial impact of the breakout of the US-China trade war. The first of the series covered the sort of tit-for-tat journey we've seen in tariffs up to the now 125% tariff applied on imports of US LPG into China, whilst we also sort of dipped into how the trade war between the pair has roiled LPG prices elsewhere, so specifically in the Asia Pacific and Northwest European regions, which are of course both big net shorts and key global pricing hubs where we have the Argus CIF Arrow large prices and Argus Far East Index benchmarks respectively. And we also cast our eyes forward in that initial podcast, sort of looking at how this situation might play out in a more global sense. So please do check out that edition. But today we move quite rightly to shine a light on the Chinese market specifically, which is really the center of the story, as China so often is in anything LPG. So just to get the ball rolling, really, yesterday, the podcast we recorded, about the one thing that was clear was that this massive 125% level that we are now at is going to see some demand destruction in the Chinese market. So Celia, just how big of an impact do you think there's going to be on the petrochemical sector there, where these big single feedstock propane only consumption units, the PDHs, really dominate alongside the flexible steam cracker fleet as well?
Yeah, actually, the impact is huge. And let's see, firstly, the total import volume of China last year for LPG is 35 million ton. Actually, it's 18 million ton from the US. And mostly propane, it's reached 17 million ton, and the butane imported from the US is less than 1 million. So mostly the trade disruption is in the propane, and the most impacted sector is PDH. Currently, Chinese PDH capacity is 24 million ton per year, and actually, when I talked with some market participants, most of them think when step into June, maybe only less than half of the PDH can survive. That means the operation rate might be fall to 50% or even lower. So if we assume only 50% of still keep in operation, then the demand for propane will fall by 6 million ton per year. Yeah, that's a huge amount. This is for PDH, and another big importer of the US propane is steam crackers. In China, there are 2 or 3 propane and ethane feed crackers. They cannot use naphtha. So after the tariffs, if they cannot find some solution, those NGL feed crackers may need to shut down. So this is our assumption. And also some naphtha and LPG feed crackers with the flexibility to use more naphtha. They can keep running, but the import demand for propane will decrease. And already we heard from market participants that the domestic refineries, state-owned one and also the private one or independent ones, they are going to ramp up their refinery runs. That means they will try to produce more naphtha to cover the shortage in the petrochemical sector. Yeah.
Sure. So yeah, gosh. So that's
Yes.
massive rafts of shutdowns in the PDH is expected. Seriously, massive numbers you're talking about there with regards to demand destruction there, and some significant reductions in the flexible crackers as well, depending, of course, on the ability to flex. But of course, so much of this sector was built on the very proviso that there would be, abundant, cheap LPG, namely US LPG, and therefore flexibility. It seems it's much more limited than we see in other regions. Where I sit, for instance, in London, the European steam cracker fleet has they can consume a lot of LPG, but it also has massive potential for flex. Relatively speaking. So yeah, a massive contrast with China.
That's right. Because the steam crackers, they also contribute about 8 to 9 million ton per year demand. And after the tariffs, maybe half of the demand will disappear.
Yeah, it's often sort of overlooked when there's simplistic analysis sort of applied to this market because we're also obsessed with the PDH sector. But the steam cracker is massive there as well, especially if you compare it to other regions. It's vast, really. So, I mean, the absence of so much LPG and ethane as well actually will lead to some shutdowns. This then will have a knock-on effect of presumably pushing the petrochemical product market quite tight. How do you see that shortage sort of being covered in China? Can it be covered? I mean, the implied numbers must be pretty massive.
Yeah. Actually, the solution for this, the shortage after the tariffs, it mainly could be covered by naphtha, those steam crackers. Actually, last week, 2 new steam crackers, Wanhua 1.2 million ton per year in Yantai, and another one, ExxonMobil's 1.7 million ton per year steam cracker has started up this last week, and another 2 with total capacity of 2.7 million maybe come next quarter in around mid of this year. One is located in Jilin. It's from PetroChina Jilin, and another one is Yulong, number 2, 1.5 million ton. So, and by the end of this year, maybe another 2 new crackers to come out, Shanghai and Guangxi, PetroChina Guangxi. So that's the most efficient way to cover the shortage. And then I think currently the import arbitrage of propylene, ethylene, and also their derivatives are open. So maybe the imports can cover a part of the shortage now.
Okay, sure. And I think that's clear. Yeah. I guess, at this point we've covered sort of the initial impact of on the petchem sector and how things are looking there, or how they will look going forward. But there's more to Chinese demand than this. Again, as I say, we often so much focus on just the PDH sector, but there's the flexi steam crackers that we've covered. But there's also other aspects to Chinese demand. So could we please sort of begin to talk a little bit to this? So how do you see the impact of these tariffs affecting LPG usages elsewhere, like fuel, residential and industrial use, and also I know the butane market is much smaller, but how do you see the impact of tariffs playing out on butane use in the gasoline blending sector and gasoline component sectors?
Okay. Yeah, butane sector is quite small. Last year, China import, I think, a little bit more than 6 million ton butane, and most of this butane are used in the residential sectors. But China government is promoting pipeline natural gas. And from the beginning of last year, the pipeline natural gas remained cheaper than LPG. So LPG demand in the energy sector, especially the residential application, has been kept falling in past few years, and this trend may be accelerated this year because the domestic LPG prices is quite firm. Actually, it's jumped after in last week after the tariff news. And going forward, LPG domestic prices will be protected by these tariffs, and LNG import cost may be going to fall, especially some pipelined natural gas may be could from Russia is going to increase this year. So the price gap will lead to less LPG consumption and more natural gas consumption. This is a residential sector. Another sector about another major demand drive for Chinese butane demand is gasoline blending, especially MTBE. From 3 years ago, Chinese MTBE export keeps, I think, over 30% annual growth. Normally the MTBE export will use imported butane because this can get a tariff refund. This is more like a processing trade. So I think this trade may continue if the US butane price cheap enough to keep the MTBE export arbitrage window remain open. Because in Asia, especially Southeast Asia, they need this part of MTBE for gasoline blending sector. Yeah.
Okay, so the residential sector, I guess, quite natural that, I mean, these developments, these tariffs are only bullish for propane, right, in the domestic market at least. So of course that's going to exacerbate any trend of losing market share to nat gas, where price is the driver there. And then butane, MTBE production perhaps left unscathed, which is just to confirm how much butane demand comes into that sector. Do you have a number there?
Oh, yeah. Last year, China exported 2.4 million MTBE, and the unit consumption to produce 1 ton MTBE is to consume 60% isobutane.
Okay, sure. So significant volume there. Well, thank you very much for your insights here, Celia. I really have clearly shone a light on the Chinese market, which was sort of necessary after our initial podcast was looking more at the sort of global picture, but the real story is in China. So thank you very much for joining us today. And
it's
just before,
pleasure.
Sorry.
Yeah, my pleasure to do that.
Very good. Yeah, I mean, we enjoyed having you on. It was necessary to complete the picture, really. And talking of completing the picture, just before we go, I'd like to flag that we have one further podcast on this topic coming in the coming days, and there we're speaking to our US-based editor, so the other side of the two parties directly involved in this, and we're going to be looking, of course, at US prices domestically, and how that sort of feeds into implications for exports out of the US, and we'll be looking a bit forward on the outlook for that market. So please do keep an eye out for that impending release, and thank you very much for listening today.